This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, December 15th, 2014. Euro dollar. The market has enjoyed a nice recovery over the past several sessions, but is expected to find good resistance ahead of the 50-day moving average, which has done a formidable job of capping the downtrend over the past several months. A break back below the recent low that we saw on the 11th of December at 123.69 would do a good job of opening the door for an acceleration to the downside, putting the pressure back towards the 2014 low, which at 22.47, 122.48, which guards against the 2012 base at 120.40 further down. Ultimately, only a close back above the 50-day moving average, which currently comes in at 125.40, would compromise the current bearish outlook. Sterling dollar. Cable continues to consolidate off its recent 2014 low at 155.41, with the risks tilted to the downside and a break back below 155.41, opening the next downside extension towards the 153.50 area further down. Ultimately, only a close back above 158.26 would compromise the current bearish outlook. Dollar yen. Dollar yen has been in the process of consolidating just below the recent 10-day moving average that it has broken for the first time since mid-October. The break below the 10-day moving average suggests that deeper setbacks could still be in the cards towards the 38.2 fib retracement off of the October to December low-high move, which comes in at 115.50. Ultimately, the structure here remains intensely bullish, but again, a correction is sought, for a little bit of a deeper correction is sought for the market to put in a higher low before establishing any meaningful upside back towards and above the recent yearly high and 7-year high at 121.85. Euro Swiss. Euro Swiss is back to trading just off the major psychological barrier at 120. A break below 120 would open the door for an intense acceleration of declines. However, inability to break below 120, with the market holding around the 2010 area, followed by a break back above 120.45, would take the pressure off the downside and suggest the market is poised for a more meaningful reversal. Aussie dollar. Aussie dollar remains locked within a well-defined downtrend, with the market recently breaking to another 2014 low. The break below the recent 83 figure will now put the pressure on the next major psychological barrier lower down, which comes in at the 80 area. Ultimately, only back above 85.50 would compromise the current bearish outlook. Dollar CAD. Dollar CAD has recently broken to a fresh 2014 high above the previous high at 1467, which opens the door for a measured move upside extension towards 117.50 further up. Ultimately, any setback should now be very well supported by that previous resistance turn support in the 1467 area, with only a break back below 1313 to compromise the current bullish outlook. Kiwi dollar. Kiwi dollar gains have stalled out just around the 20-day moving average, with the market unable to close above the moving average, and setbacks are now seen back towards the recent 2014 low at 76.09. A break below 76.09 will then expose a measured move towards 72.85 further down. Ultimately, only back above 80.35 would compromise the current bearish outlook. SPX 500. The S&P 500 has now broken down below November's low, and after breaking to a fresh record high in December, this sets up the potential for a bearish outside month formation. This would be a bearish outside month off record highs, and this could open the door for a long overdue top in the SPX 500. Look for confirmation with a close below the previous close from November to set up the stage for deeper setbacks into January. The market would, of course, need to close below 2068. That was the closing level from November, to confirm the bearish outside month formation. Gold. Gold is still in the process of consolidating or managing a slight recovery, but still corrective within a broader downtrend. The market would need to take out key resistance at 1256. That's the high that we saw on the 21st of October to compromise the underlying bearish trend, while inability to do so will suggest a lower top is in place ahead of a resumption of declines back towards the recent 11/31/2014 low. That's all for today.